What's going on, everybody? Welcome to a Capital Hungry Market Analysis and Trade Ideas webinar. It is currently roughly 7:30 p.m. Eastern, Monday, May 29th, approaching the end of the business month. Just good to note that understanding market timing and how it's very common to see price setups or potential corrections that can occur, which is order flow setting up from an institutional perspective for the new business month, which we observe from a retail trading perspective as technical pullbacks and price setups. But usually that also lines up with economic data. Now, overall, in terms of market sentiment, we've gotten very accustomed to playing the dollar bulls ever since we had the rejections and failures to break that very important higher time frame price point at 101, then also having the break out of that 30-day consolidation, trading above 102. We've also become very accustomed to these Japanese yen bears, still playing the dovish monetary policy of the Bank of Japan. And of course, we had Tokyo, Japan inflation still lower than expected, which just further cemented Bank of Japan's loose financial conditions and holding a dovish monetary policy stance. On top of having more optimistic data just into the mix over the last week or two, we've seen Japanese yen breaking below 73 after that double top at 76, starting to trend to its previous lows, and dollar trending up to that weekly double bottom leg we've been highlighting at roughly 104.5 and 105. But we do have to be careful here as we're watching dollar movement. Every time you have a double bottom created, it's not just a guarantee you're just going to continue breaking higher and trending straight to the highs. You can even see a minor example here with a very similar type of price formation that occurred at an important liquidity zone and price point down here at 90. You can understand when you're looking at dollar movement, of course, you had the failure to break that key price point in initial reaction, creating that technical double bottom leg. But we just look at it as understanding we're approaching a very key higher time frame price point, and we're potentially starting to get a shift in order flow with buyers jumping in and more buyer volume being accumulated from lower, more preferred demanded price points. Now here, when you get the failure to break lower again, you can see you have a pretty smooth upside play up into that DB leg, but you don't instantly start to break higher. And you have to understand that we're looking on a weekly perspective here. You can see as you're still going to have changes in economic data, daily changes in sentiment, reactive events that can come into play. As you approach this price sensitivity area for a period of a couple of weeks, you had some aggressive pullbacks, failure to break before finally extending the trend. This isn't something that is guaranteed to repeat and be an exact mirror, but it wouldn't be out of the ordinary, as obviously the higher inflation environment coupled with increasing debt rates, with central banks doing the most aggressive rate hike cycles in history, has been exposing some cracks in the financial markets and obviously dampening economic activity. These optimistic data reports are not something that's going to be long lasting, as overall economic activity on a macro perspective has been slowly going more downhill. If we don't have that continued optimistic data or reasons to support dollar strength, then it doesn't mean we're expecting a complete reversal. But from this price sensitivity area that we're digging into here, that you can also, besides the DB leg, see these reactions both on the buy and sell side. It would not be out of the ordinary to get some type of pullback and correction plays before having the fundamental catalyst or buyer volume in play to be extending higher. The only reason we have to zoom out and understand this is the same time we're approaching these price points of interest, we also have the business month closing off. So setting up order flow for the new business month, and you just look at the perspective of how order flow sets up and looking at the candles, failing to break this price sensitivity area or starting to see some exhaustion signs, even the next month just making a lower wick would just be looking like an intraday pullback here into the 103s, 102.2s before still extending higher. So you can see that take place when we were looking on the weekly time frame down here, right? It might not seem like much when you're looking in hindsight right now, but it's very significant understanding the perspective from our lens, which is a manual retail trader. Great rejection, great buys. You can see here a month straight of easy dollar buys, very similar to what we have take place here. Month straight, beautiful rejection, beautiful dollar buys, but then towards that key price sensitivity area and that double bottom leg, you can see what we're going to highlight here is you peak a little bit higher, but for a period of almost 2 to 2.5 months going into the third month, you're failing to break or really close above there. That's really significant to understand. For a period of 2 months, and then even this monthly candle still made a lower wick into this price sensitivity area, you're having dollar bouncing on the intraday from pretty much 91 all the way up until 92.5. It's not till almost after this bullish engulfing candle here, right? It's not till almost 4 months later where you're actually closing above and having some of the continuation moves, right? So we have to understand that the market moves in waves. You have these impulsive phases and you have these corrective phases. Overall, you still want to zoom out and look at key price points of interest. And don't get me wrong, the dollar buys we called from 101, expecting the range break out of 102 was fantastic. Very smooth sailing on playing this Euro USD bearish structure we've been taking advantage of. Same thing on GBP USD, sellers just printing lower lows, having these short-term pullback and corrective phases as they take profit, and buyers jump in to provide that exit liquidity. Then as you push price up to more favorable seller price points, the orders get collected there and you continue the trend, right? Inverse here on USD CAD with buyers printing the higher highs. As you have significant intraday movement, buyers take profit, sellers jump in hand to provide that exit liquidity. That transaction creates a pullback phase, pushing price to more favorable, lower demanded price points, and you continue trend. It's been pretty smooth sailing for the entirety of May, right? You can see this bearish trend has been pretty clean through the entirety of May. It's been pretty clean on GU through the entirety of May, inverse on USD CAD. So you can get very accustomed and very attached to that bias for a whole month, right? Obviously, excluding the weekends or any days you may not trade or be at the charts. But if you are a dollar pair trader, for the entirety of a month, you are primarily playing the dollar bullish bias, right? If you just get attached to that, just start to marry that bias, but you're not looking at key price points of interest on the higher time frame, not understanding economic events to come, not understanding market timing of ending the business month, then you can start to give back some of your profits or end up being on the wrong side of the market when you can have larger corrective waves take place. And this is something we need to keep an eye on when we're looking at dollar, digging just a little bit higher up into this 104.5 and 105 area. That's our key area of interest here. Also, when we're just highlighting on the weekly, going into that 104, 105 area is a key area of interest where if we don't have the fundamental catalyst to support breaking higher, if we don't get any global international fear, uncertainty, and doubt to still appeal to dollar safe haven side, if we don't get continued optimistic US data reports, if we don't have any new hawkish events from the Federal Reserve, then it doesn't mean we're like guaranteed to just melt, but to see some type of corrective phase or pullback wouldn't be out of the ordinary before starting to extend higher and still continuing the trend. This is what you have to be potentially aware of and adapt to accordingly, as it's going to translate day to day to the trade ideas you map out, the bias you're looking to play, and then, of course, your execution, right? So this dollar upside has been solid, but we have to be careful digging into this area. And at the same time, tomorrow, and just overnight, we're starting to have expectations of data starting to decline. Tomorrow, we just have, in terms of the US data, some housing figures with house prices information, with Case-Shiller data and consumer confidence. Both of these reports are expected to decline. They already have some lowered buffered expectations, like house prices data on the yearly over here from the Case-Shiller reporting, expected to go from a positive 0.4 to a minus 1.6. Consumer confidence report here and consumer surveys from the conference board expected to show a pretty aggressive drop from 101.3 to 99. But that just shows that economists and investors are starting to expect some of this data to decline. We can even see that with all of this sentiment reporting on the Euro side. Economic sentiment expected to drop, industrial sector sentiment expected to drop, services sector sentiment expected to drop too, right? Just because we can have a couple of optimistic data reports in the mix of data that's overall being collected month after month, quarter after quarter, year after year, doesn't change the overall macro scope of the economic environment we are in. We're not in flourishing, optimistic, high economic activity times, right? And it's just, and on the flip side, just because we're in these, just because we're in this period of time where economic data and activity is declining, that doesn't guarantee every single report for a month over month change is guaranteed to be bad. It fluctuates, just like market prices and how things move in waves. When you're looking at some of these data reports, they've overall been more trending like this, right? You're going to have these fluctuations with some of these optimistic bounces, sometimes even being better than expected. But the overall macro trend and scope has not changed as long as we're in this environment where inflation's still pretty high, interest rates are still high and going to remain high. And obviously, we've been seeing some of these fallouts in the banking sector, geopolitical tensions rising, and everything of that nature we've been talking about from a fundamental perspective. So if these data reports on the US side tomorrow, and even looking at some of the other economic data through the week is not continuously optimistic, then we also have to potentially expect that weakening US economic data, the same time dollars approaching this price sensitivity area, we can see buyers take profit, sellers hold a bit more control short term on the intraday, and get some pullbacks that can occur from here, which obviously bad economic data on the US side and dollar weakness can lead to some aggressive Euro USD pullbacks, aggressive GBP USD pullbacks, and bad data could lead to some pretty aggressive gold bounces into this low 1950s, high 1940s area if we still hold it. Something to keep an eye out on, where also into the new business month, bad economic data leading to more demand in safe havens, such as the Japanese yen, doesn't mean the yen would be guaranteed to just turn bullish and rocket to the sky. but it would conveniently for the new business month also be setting up order flow and leading to a data-induced pullback on GJ, which we can start to see a corrective leg take place if we can't print any new highs, and GJ start to have corrections with the first area of interest being like 171.8, which is hundreds of pips that you'd want to adapt to accordingly before buyers come into the scene. And remember, when you're looking at GJ, yes, these buys we've taken advantage of from the 160s, 168s from the Bank of England rate decision price setup. It's been fantastic. But overall, when you're looking at GJ movement, you have to be cautious that very aggressive pullback waves take place that still do not break overall structure. If we start to see recession scares deepen, continuous bad economic data, price setups into the next business month as well, besides just even a first area of interest of retesting around 171.8, GJ could come retest into the 170s, no problem, and still be very bullish on the higher time frame, understanding and back testing how this pair behaves and reacts to sentiment, whether you're having periods of optimism or periods of pessimism and more uncertainty and doubt, right? So all I'm saying is it's been great, those dollar buys we've been playing, the GJ bulls we've been playing, it's been great. It doesn't mean we can't continue this bias of GJ buys and dollar bulls, but we don't want to get sloppy as retail traders. We don't want to just become too hopeful and just have continuous expectations of like, oh yeah, I've been buying GJ for the last month, so I'm just going to look for another pullback buy or another breakout buy, or I'm just going to look for another dollar bullish like move, and I'm going to take advantage of that. I've been playing it for the last month. You're not even going to go through that internal dialogue of understanding you've been playing it for the last month. It's just going to be more autonomous, where you're just going to come to the charts and your brain's just going to be already set to be like, oh, I'm looking for Euro USD sells. I'm looking for GU sells. I'm looking for GJ buys, just because you've become so accustomed to playing that day after day, week after week for a period of weeks or a period of months, right? So in Capital Hungry, it's always good to have these reminders, because if we don't still have continuous optimistic data, if we start to get recession scares coming back to the table, weakening economic data, any global fear, uncertainty, and doubt, then we can't continue to look for GJ buys. We have to understand we can have a potentially aggressive corrective leg before buyers come back into the scene, which is 100% common when you're looking at how GJ behaves, and especially when you start to print some new significant higher highs, right? Or if we start to get recessionary scare data from the US, economic activity starting to show declines, we can't just continue to hope and expect dollar to be breaking above this next key price point of interest for no reason. What we should expect is some type of correction phase where if dollar doesn't break above here, we don't have the data to support it. We can see some corrections before continuing bullish, and we understand and adapt that accordingly to Euro USD, GBP USD, USD CAD, and so forth. Same thing with gold. A lot of us got really accustomed from 2050s down to playing these sells. We're starting to look for buys from the high 1940s and low 1950s, but we can't just expect more sells if we don't have the optimistic data, less demand in safe havens, and if we don't break this key liquidity zone that we're still holding in this price sensitivity area, where outside this price glitch, we've just been consolidating to start this new week, as we of course had the bank holidays at this area. We're still holding bullish market structure on the higher time frame. This is still a very common pullback phase on gold, even in size and its price anatomy and movement. Right? So we have to be very cautious with gold at this 1940s, 1950s area. The same way we have to be cautious at GJ and saying, yeah, the buys have been fantastic, but will we have continued catalysts to still trend into highs? We might not. We might see a corrective phase. If we don't have the continued optimistic US data, can we really expect dollar bulls just to continue for no reason and break above this next key price point at around 104.5, 105? We might not. We might dig up into there and then start to get a pullback rejection. Right? So now bringing that information together with just some of the data reports we have in focus and with current structure on the intraday, outside of this on gold, it's very difficult for me to see sells unless we're breaking below the 1930s. This is a price glitch we can ignore. We can pretty much just say market structure outside of this price glitch, which was just on Owanda, is a consolidation right now at this demand zone, hugging between 1940s and 1950s, showing a lot of exhaustion at the 1940s, which is a retest of previous significant daily highs, as well as bullish market structure in that very key liquidity zone we've been talking about, right? Here on GJ, we printed some highs, but we have to be cautious where if we can't print any new higher highs, even at least minimum on GJ, expecting a pullback into 171.8, 172 would just be normal intraday movement if we can't print any new higher highs. And if we have bad economic data, that data is just going to support the increased probability of seeing a pullback instead of continuation moves, right? On our dollar pairs, if we can't print any new lows and we see declining US consumer confidence, house price data weaker as well, US dollar have a pullback and not print any new highs, then seeing some type of pullbacks would not be out of the ordinary. Otherwise, continuation move prices are very clean cut, which we'll talk about. Even when you look at USD CAD, which has way more aggressive waves in price change, right? Yes, we're still respecting this key demand zone, but you still just can't be ignorant and just look at one side of the market. Yeah, we called fantastic buys from that demand zone, dollar strength coming into the table. We had some pretty solid bullish market structure and price action up into there, but we're clearly digging into a price sensitivity area that's in the way from reaching our higher time frame targets, where if we don't have the catalyst to support breaking above there, getting some type of aggressive corrections is not out of the ordinary. We could easily just come down into this range here at 1.35 before still continuing more bullish on UCAD. And if UCAD has that movement for a period of days or weeks, you obviously don't just want to mindlessly keep jumping into buys for no reason. You want to adapt to that accordingly before continuing higher. Look at this. Look at here where USD CAD had some upside for a period of weeks here. You're consolidating in hundreds of pips where the key point to take away is you're still not breaking that price sensitivity area high. You come all the way to the lows here. You revisit this price sensitivity area again. Look here. It might not look like much in hindsight, but that's hundreds of pips of range created there and extending for a timeline of a period of days, probably a couple of weeks of price action right there, right? So you can't just expect this straight smooth sailing the whole entire upside. This has been fantastic we played so far, but if we don't break above this price sensitivity area, then starting to see some type of corrective phase, whether that's a bearish pullback or an accumulation zone, would 100% not be out of the ordinary. This also gives us very clear-cut information where if we just have continued optimistic US data, more demand in the US dollar, and USD CAD breaking above 1.365, that it's very clean-cut continued buys. But this also gives us clear-cut objective information to the other side of the market that if we don't break above there, look, you can either see some consolidation or pullbacks before continuing higher, right? So we have to be cautious as GJ's printed these new significant highs. And if it doesn't print any new higher highs, we have to be cautious of gold at the 1940s here, and dollar, we have to be cautious digging into this 104.5, 105 area, right? UCAD, you can see us digging into this area at 365. When you zoom out here and you look at the higher time frame on Euro USD, it's fantastic. It's fantastic to talk about how we've had this clean bearish market structure and downside, but starting to dig into very key price sensitivity areas here across the board, where besides reaching these higher time frame lows at 1.05, very similar to UCAD, but almost on the inverse, we clearly have a price barrier in the way, digging into this price sensitivity area at 1.06, 1.07 flat pretty much, where if we don't break below here, getting some aggressive pullback phases, which can really shake out a lot of sellers in the short term, look like buyers are coming into the scene before continuing more bearish, to me would 100% not be out of the ordinary, right? You can even see zooming into this area we're talking about here before, we've had pretty drastic movement take place here on the buy side with an aggressive pullback. So seeing a pullback in this area, if we don't break below and have weaker US data before fading it out and sellers coming back into play, would not be out of the ordinary to me at all. Now, what's going to be our factors determining whether we have continuations or whether we have pullbacks taking place? Well, in the example of gold here, whether we have continued sells and breaks lower and breaking that liquidity zone is going to be dependent on economic data, and key price point pretty much at 1930s would be a real break of structure. If we're still holding above there and we have bad economic data, then higher probability we're going to see more demand in gold, and gold have some bounces in this price sensitivity area. On GJ, if we don't have continued optimistic data and we don't print any new highs above here, then seeing some type of corrective phase, retesting better buy zones would not be out of the ordinary at all, right? On Euro USD, if we don't have continued optimistic US data, and if we don't break and hold below these significant lows and start to have bounces back above like 1.073 here, then seeing an aggressive pullback phase take place would not be out of the ordinary. It also gives us clean-cut information where if data still beats those forecasts, still beats those low expectations from economists and investors, that we have very clean continuation plays, right? Same type of thing on GBPUSD, inverse on USD CAD, US 30 still respecting that bearish structure where bad economic data and recession scares have overall just been leading to a shift in risk flows where you have more demand in your safe haven asset classes, less demand in your risk assets. So we're just going to see less confidence in the US economy and markets. We're still seeing that this is a pullback coming from new lows. If we can't break above 33K with more fear, uncertainty, and doubt, less demand in risk assets, noticing volatility index holding the support and trending higher, then we're still going to see stock market bears come into play from these rejection points. Now, of course, the first data sets we have in play are some retail sales from Spain. I can still see this data being relatively poor. Economic, industrial, and services sentiment from Eurozone and consumer confidence can still be relatively poor here, but already have buffered expectations. Might beat these expectations and still be worse than prior. Then for our US North American trading session, we'll probably start around 8:45 because we just have some house pricing data at 9, and then the more important consumer confidence at 10. If we see consumer confidence decline, which it would be preferred for recessionary scare data to be below 99, being lower than the prior and the forecast, this can lead to more demand in safe haven asset classes, outflow out of the dollar because it's US specific economic data. So dollar safe haven appeal does not hold any weight. And then obviously less demand in risk assets, potentially starting to see those corrective waves and those shifts in structure taking place in the short term there, right? GJ pullback from these highs, gold bouncing from this demand zone, Euro USD and GU pullback from these lows, UCAD pullback from this key price sensitivity area, and adapting to that accordingly. Sellers coming back into play on US 30, right? So now, bringing that information together to the table, let's just pretend this doesn't exist. I can personally only see safe sells, because even if we wick into this area but still close above, which is very, very common and occurs frequently on gold, I can only see safe sells with these confirms. Break structure, break PL 1930s, 1929 key level here. Very clean continuation plays. We don't have any reason to look for gold buys. We'll still be taking advantage of what we've been calling from the 2050s. We've just been starting to look into this area of the high 1940s and low 1950s for buys based on key price points, higher time frame structure, and understanding gold movement. Otherwise, if we mess around in this area, come above 1945, 1953, and 1956, I would see buyers coming back into the scene. This being supported by, of course, declining economic data, recessionary scared narrative starting to come back into the scene. Okay. GJ, don't get me wrong. GJPY has been fantastic. 168, Bank of England price grab, order flow accumulation here, breakout into some new highs, but we can't be ignorant. If we don't see any new highs printed, if we start to get some exhaustion signs, if we see changes in risk flow due to market sentiment, obviously starting to shift with bad economic data and recessionary scares, then we can't just put our hands together and pray and hope GJ just continues higher. What's higher probability would be a pullback phase, where my first area of interest for the pullback phase would be this order flow and accumulation zone of previous highs, at least expecting a pullback into like 171.5, 171.8 before buyers come into the scene. Bringing that information together with current structure, if we break below this reaction point here at 173, I would take advantage of pullback downside plays and corrective leg, where the first area, and scaling down accordingly, whether you're scalping, and the first area of interest I would start to anticipate and look for buys would pretty much be 171.5. Now remember, depending on sentiment, we may even break below there. It's very common GJ can have aggressive pullback waves, but going level by level, the first area of interest for buyers to jump back into the market would be roughly around previous highs and this order flow accumulation we saw take place with a retest of structure at 171.5. As we revisit there, it's going to be data dependent and obviously based on price action if we jump back into the buys. If you get a straight bearish break below, obviously don't be like, well, gee, you said buys there. come on, use some common sense, right? But that would be a first area of interest. Otherwise, if we, the only way I could see continued buys is if we are breaking above 174. Otherwise, I'm expecting these type of corrective waves to take place. We need to be breaking into new highs. Otherwise, you don't want to see something like this and these corrections take place. Does that make sense for everybody so far on gold and GJ? Also keeping in mind end of the business month, potential price setups into the new month, expectations, economic data through the week can be declining. No understanding and adapting to market waves and shifts in structure, adapting to corrective waves versus your impulsive movement. Any questions about that stuff so far? Okay, Euro USD. Now, very difficult for me to see any more Euro USD sells because we're approaching a key price point on the higher time frame. The same time, obviously understanding dollar correlation, we're starting to approach a key price sensitivity area at 104.5, 105 area, right? If we don't have continued optimistic US data or any reactive fundamental events to support more demand in the dollar, seeing a pullback phase would not be out of the ordinary at all. I would only see continued sells with continued dollar strength printing new highs and breaks below 1.07. Otherwise, especially as we're approaching the end of the business month, can see order flow set up for the new month, I would expect to see a buyer pullback phase that would probably be more aggressive than 1.076, going up to 1.079, even 1.084 before sellers come back into the market. Right? We've called fantastic dollar strength, fantastic Japanese yen weakness. The gold sells from 2050s down, started to look for the buys at 1940s, 1950s, right? But we can't just get married to a bias as manual retail traders that trade the market on its daily waves, lower time frame waves, and some of these higher time frame waves. We have to stay adaptive to the changing market waves and conditions, which we can anticipate these changes based on rejections at key price points, approaching major liquidity zones, market timing understanding of business month setups, and of course, economic events to come. GBP USD, similar idea. I can only see further continuation sells with dollar printing new highs and breaks below 2.3. Otherwise, I'd be expecting pullbacks from key level here up into retest into this liquidity zone of interest at 246 before starting to see sellers come back into the play or any type of rejection signs. USD CAD, we could see pullbacks all the way into 348 before seeing buyers come into the scene, where it would also make sense with dollar weakness and breaking below this consolidation and support, probably more than likely dig into this liquidity zone, not just the key level as well. Otherwise, very clean cut, simple confirms for continued UCAD buys if we have the catalyst to support the break above that key liquidity zone and price sensitivity area, as well as level 365. US 30, we're still looking for pullback 33K sells, break back below 33K sells, would still want to be revisiting these lows. Fear, uncertainty, and doubt starting to come into the scene. VIX turning more bullish as well. Recessionary scare data leading to less demand in risk assets. Only see stock market buys or any further buys above 33.5. So just a little bit of an educational review as we're approaching the end of the business month on some key price points of interest, market structure and understanding market waves, adapting to market waves accordingly, setting up key trade ideas based on understanding these market waves, where to look for continuation moves and where to expect pullbacks, and the fundamental catalyst to support that.